Well, good afternoon. Thank you for joining us. I know you have busy days. It's great to be here with you. My name is John Zepeda, and I am the Director of Business Development with Stratus Funding. Over the past 20 years, I've been in the specialty finance industry working with individual investors, policy owners, advisors, attorneys, and brokers. And not too long ago, as a financial advisor in the post DOL rule change era. So I appreciate the position many of you are in now in assisting your clients. I'm excited to be able to present our solutions with you today. I want to help you become more educated on the secondary market for annuities and the impact flexible liquidity can have in the lives and businesses of your customers and clients, especially those who own annuities and payout and need to explore lump sum option. And as I go through these slides, I'll let you read the slides real quick. There's some good content on there, but I don't want to read it word for word. So Stratus Funding is focused on working with you and your clients. We're a subsidiary of J.G. Wentworth Company, company that has been purchasing annuities and structured settlements for over 25 years. During this time, we've paid out more than $32 billion in payments to clients for the purchase of future payment obligations. As a result of our comprehensive underwriting and capital market guidelines, our annuity-backed notes are AAA rated by Standard & Poor's and AAA rated by Moody's. So let's explore why this secondary market will help you build additional revenues, enhance client relationships, and strengthen your marketing efforts. First and foremost, we know you will always do what's in the best interest of your client. You can be reactive to a situation that may come up from a past or current client or prospect, or you can be proactive and know the values of their policies as you conduct your annual reviews. Helping the clients sell their annuities offers you with the potential for several new commission opportunities. Of these, the lowest hanging fruit comes from clients or prospects who are restless and want liquidity for their annuities. All of these clients need is to be made aware of the fact that they can sell their annuity in lieu of surrendering the policy. While this will not be for every client in your book of business, it's important to note that these sales represent an extremely high margin business. That is, you are addressing and creating additional revenues with little or no investment in prospecting, acquisition costs, increased time with relationship building, closing, and handholding. In our experience of working with advisors and agents, there are many scenarios in which a client's want or need for liquidity will likely result in the need for an additional financial product or service or other opportunity, which offers additional commission revenues. So those of you who take a proactive and holistic approach to your clients' annuity sales can position yourselves as a driver of value in offering solutions beyond a cash offer. Improve client retention. Helping clients sell their annuities offers you the opportunity to strengthen your relationship with existing clients and fortify against encroachments from competitors. Improve your prospecting. You have at your disposal the ability to offer solutions that go beyond traditional financing. And flexible liquidity can mean a tax advantage solution for the sale of certain assets. And we'll talk more about this in a little bit, or the flexibility to sell a portion or all of a payment stream depending on the need. We do view this market as an extremely great and large potential. As many of you know, annuities provide a way for you to accumulate funds for the future. It's a great tool for retirement. I'm a fan of annuities, and money is deposited when you purchase an annuity. Money is deposited into the contract in the form of a premium. The insurance company takes these premium deposits, invests the money, and in exchange gets the premium dollars with a certain rate of interest earnings over time. Now, upon purchase or at a certain point, the owner of the policy will convert all or a portion of the contract funds into a series of periodic income payments. This process is known as annuitization. Many of the products being sold today allow for a policyholder to access money early before the policy is annuitized, and this is done in the form of early withdrawals or by surrendering the policy, or they may have riders for guaranteed lifetime withdrawal benefits. Aside from the internal features that allow for early access to money, we are focused on those annuities in payout phase or those backlog of annuities that were sold before with high surrender charges or where the policy just doesn't fit today's needs. As most annuities are well intentioned, as I said before, to provide for long-term income and for retirement, small percentage of policyholders are going to have a life change, and they're going to need access to money up front. This restlessness of people needing to sell can be for many reasons, and we're there to help you when that situation comes up. So I know there's a lot going on in this slide, but what's important to note, again, we see the need for liquidity as a big opportunity. By our estimates, there are between 50 to 100 billion dollars of annuities that could be sold into the secondary market annually. Now, this estimate owes itself to the success of annuities as a financial product to begin with. Presently, there are over $3.6 trillion of assets backing annuities. $2.5 trillion of these assets are from individual policyholders. This excludes group annuity policies such as 401k or 403bs, and over $15 billion is added each year as fixed immediate annuities. And these are annuities in payout. As a purchaser of annuities, Stratus Funding is seeing the impact of an aging population and the beginnings of the greatest transfer of wealth in U.S. history. As noted by Cerulli and Associates in these slides, projections are that nearly $68.5 trillion in wealth will pass hands to heirs over the next 25 years. A growing percentage of the policy Stratus Funding is reviewing are inherited policies and payout. Fixed index annuities purchased over 5 years ago with surrender penalties, where cash surrender and accumulation values, where there's a big difference, we come in and add value. Now, if you consider immediate annuities that are inherited, this is a great way for agents to bridge the generational gap. Many beneficiaries are grateful for their inheritance, but with the high cost of living, for some college expenses, a lump sum may help them accomplish some important goals. Now, we're seeing advisors have their clients' annuities policies appraised before the need to sell. Knowledge is power, and knowing the value of their policies helps to facilitate a conversation about wealth transfer and finding efficient ways to accomplish this. The secondary market for annuities should be part of the conversations you're having when considering wealth transfer and inheritances and beneficiaries. We see a great trend. Every year this market's been going up and up, but records are meant to be broken, and in a good way. We're selling more annuities. Um, but when we look at these deferred index annuities from before, it's not a matter of person not being able to get the money like it is with immediate annuities. On the deferred side, it's a matter of whether they take liquidity or are they taking too big of a hit because of surrender charges. A lot of the popular products being sold today require you to hold your annuity for a certain period of time and then annuitize it for maybe 5 or 10 years before getting that full value. In a lot of cases, we're able to take over those payment streams, and after discounting the value of the product, discounting the payment streams, we're able to get a client a much higher value than they would get from surrendering it back to the insurance company directly. So as part of an advisor agent's annual review, you should look at the policies and see what they're worth, both from the carrier valuations and on the secondary market. What's it worth from an income standpoint? What's it worth if it's appraised by Stratus Funding? What's the surrender charge? You want to have a complete picture so you can make some great decisions for your clients. Annuities are deal for our program, by and large, are those in payout. Either purchased as a SPIA, structured settlement annuity, lottery winnings, policy that's been inherited where someone had an option to take a lump sum or take a payout, and now they took a payout and things have changed. A lot of deferred annuities we're looking at have high surrender charges. The goal is really, can we add more value? Can we present an offer that's better than the surrender? If we can beat it by a few dollars, then we've done something. But in many cases, we can beat it significantly. Now, many annuities review are a result of an individual trying to qualify for Medicaid, and so now they're subject to income standards. They call us to see if there's a value for the policy. They'd like to get on Medicaid, and we're reviewing those policies all the time. We purchase guaranteed life contingent payments, qualified annuities, which are retirement plans, non-qualified annuities, purchase after tax dollars, and we customize the sale to fit your client's needs. Do keep in mind, many of the policies we purchase will state the policies cannot be assigned, transferred, are irrevocable, have no cash value. Many of the policies we work with contain such language. So please don't let this preclude you from discussing a policy with us if you see that language. Annuities have had the myth of being oversold and underserved. It's common with life insurance and annuities. You sell it and you walk away. Well, we can change that. Let's be involved. Let's continue to look at the policies, see what the appraised values are. Um, Annuities don't have to be complex. We can make this process simpler. So for whatever the reason, for one's need to access money early from their policy, what is important is that you're there for them when the need comes up. And again, you can be proactive about this or you can be reactive in your approach. For over 25 years, we've been assisting those individuals who need liquidity. I want you to keep in mind, while the presentation we're discussing annuities, I encourage you to keep an open mind, consider what an annuity is. It's a payment stream paid out over time, issued by insurance carriers. We monetize those payment streams. We consider it's good collateral paid by some good companies. But what other payment or income streams are you seeing? Many of your clients may be business owners who receive revenues from their business or contracts that they own, from royalties or lease rights or other obligations, business notes with collateral, cell tower, billboard leases, life settlements. So these are payment streams that we're interested in. We'd love to partner with you in helping to see if we can provide liquidity for them. I think the market's bloom is ripe now for this opportunity, and I just encourage you to keep an open mind when we discuss liquidity for payment streams. So we're going to go over some case studies, and let's go over some examples and some messaging. So in our first scenario, with John Q and leaving a legacy. Now this advisor took a proactive approach, with his client, and again, he's looking at his policies. He's trying to take a holistic view, trying to see what the big picture is. And based on the objectives of the client, he was able to leverage a portion of his client's immediate annuity and reposition some of those assets into another more suited financial product, either for estate transfer, and wealth transfer, or taking best interest of the beneficiaries. What we do know is that life changes, and so we're a firm believer that why can't an annuity change with it? Again, there's annuity, $9,700 a month, payable for 20 years and then for life, and we're going to make a big change here. So as I said before, the advisor was able to reposition some of those assets for a life insurance policy. He was able to maintain enough income in the annuity so the client can maintain a lifestyle. So it's not an all or nothing transaction. We want to do what's best interest for the client, and we have the flexibility to work with a portion of that payment stream if need be. This is a win. Obviously, if we're looking at another product, it's a win because there's several commission revenues, but that's not the driver. The driver is we're satisfying the client's needs, and helping them out if that's what they need. In our second example, we have a two-tier annuity, which is a classic product sold many years ago. And I would say this is an advisor was meeting with a prospect. So he's not reacting. He's being proactive. He's out there trying to make some new clients and bringing assets under management, uncovering some assets. This particular prospect had a life circumstance change. She lost the death of a spouse, and while discussing the situation with her, she uncovered that she owned an annuity. She had purchased this years ago. She was confused about it, didn't understand all the accumulation values, cash surrender values. Some of these annuities have bonus features, so she just was kind of lost in the mix with her situation. And what's important to note in this case study is the difference in values between the accumulation and the cash surrender value. 171,000 for an accumulation, so that requires an annuitization, or the cash surrender of 102,000. What we were able to do is propose the purchase from the annuitization payout, which is roughly 1570 a month for a little over 10 years. Purchasing that payment stream, we were able to make an offer that was pretty significant, almost $29,000 more than the cash surrender option. So this is a win for everybody. It's a win for the client. It's a win for you. You're adding tremendous value than if the client had just surrendered on their own. She's able to take care of what she needs to with her current situation, and then she also picks up another insurance product towards long-term care. Who's going to take care of her when she needs it? So these are great conversations to have. And again, be proactive. Have these conversations. See if there's value in these policies, and reach out to us. So let's go over our third case study with Miss Jillian. So in this scenario, the advisor was having a regular meeting with his client. She wanted to expand her business, but didn't want to use traditional financing options, such as going through a bank, going through all your credit and history, or taking on more debt. Maybe she has bad credit, who knows? But what she does have is an asset, and she's able to leverage that asset. So she inherited the guaranteed portion of what was a life with guaranteed policy. Policy passes on to her. She has payments coming into her. She's looking to take care of the business. She talks with the advisor, and we take a look at the policy and see what if there's any value to it. And there is. So again, it presents an opportunity to leverage assets in lieu of debt. Now the advisor was able to position himself as a driver of value and offer solutions that separated him from the competition. She didn't know what to do with the annuity. He knew there was a secondary market. He reached out to Stratus Funding. We made a lump sum offer, and then she's able to reinvest into the business and grow it. She takes a portion of it, goes to the business. The other portion sets up a 529 for her children's education. So again, win-win, right? Put yourself in a position to add value, to find other ways to leverage this program. I want to go over tax deferred options, our program here, and then we'll be wrapping this up shortly. Okay. So this is an interesting product. We've had a patent on it. Not a lot of people know about it. We've been using it for lottery winners. We're looking into expanding this. So again, I encourage you, if you have something that you think might be fit, let's talk about it. But right now, in its current form, lottery winners are using it. Annuity holders, attorneys with contingent legal fees, potentially individuals with deferred compensation, and sellers of property as defined, that's a quote, by the IRS. Now, by electing to defer fees and not taking constructive receipt on the sale of these properties, sellers are allowed to maximize their wealth by growing their money tax deferred and tax advantaged, which is similar to a 401k in our program. I'm going to go back a slide. I'm sorry. So again, we have a patent financial process whereby it's already been vetted by the IRS. We use an installment method of reporting income as provided in Section 453 of the Internal Revenue Code. And again, it allows the installment method permits the seller to recognize income from the sale of the lottery prize only upon receipt of the payments from Stratus Funding. So it's not the sale of a lottery payment stream. It's when they receive it from us. We can customize these cash flows. So if they have a payment stream that pays every other year for 20 years or every year for 20 years, and they'd rather have money more frequently, this is a great way to help accomplish that. So now let's get into the lottery case study in Massachusetts. So in this case study, a lottery winner who chose the cash option up front results in a net take home of less than $450,000 after taxes. So you win the lottery, you think you made it big, you won $1 million. Actually, the lump sum is $650,000, and now you have to pay taxes. So take home is $450,000. And there's a Harvard study that has shown that a significant portion of lottery winners are bankrupt within 5 years of their own win. So there's TV shows on this, and it's the truth. It's sudden money. And this is a program that can kind of help that. So what it does is the tax deferred option enables winners to create their own payment schedule based upon their true financial needs and goals. You're working with these clients, you're putting yourself in a position to add value. Payment streams, they can be extended beyond the traditional 20-year term, or let's say there's only 10 years remaining. So again, the principal amount, investments or the purchase price is invested into the program. Capital gains and dividends are reinvested into the investment account, which then drives up the ROI. Let's dive in a little deeper into this example. So in this case study, a winner who chooses the annuity from the state will receive $50,000 a year for 20 years before taxes. So their payments are going to end at the end of year 20, and there's no flexibility to change the payment term or the amount received. Now, with the tax deferred option, a winner can extend their payments to 30 years, as in this scenario. Winners can customize it any other way, which way they'd like: quarterly, biannually, semi-annually. But again, we're looking at a 30-year option. So the purchase price is what was the principal investment received from us discounting the cash flows. That's invested. Now they are going to take a distribution. So they're going to receive 30 payments of $40,000 annually. At the end of the term, the total distributions received is $1 million. On a 30-year payout, that's $101.2 million. So at the end of the term, usually you're done. However, because they took the principal amount and invested it, since similar to like a 401k, it keeps growing over that time with capital gain distributions, return on investment goes up. They've netted almost $2.2 million. They still have money at the end of the program. And that's a tremendous value add. You get the annuities that pay out, and then they're done when they're done. Why not take a portion of it, put it into this tax deferred program, let it grow? It'll still pay out, but it's growing in the interim. So I think you can see it on this graphic, right? You got a cash lump sum, there's 650, again, less than 500,000 after taxes. Take the price as is, you get $1 million, or you sell it to Stratus Funding in our tax deferred program, let it grow, and you have over $3 million at the end. We do welcome the opportunity to discuss this program with you. I know we're going through it pretty quick, and you'll probably have questions. Certainly reach out. We're definitely here for you on this. Let's talk about compensation. I know this is a great topic. And with all the changing regulatory environments, I know it can be sensitive for you guys. But I will tell you, it's not something you should shy away from. We discuss the opportunities our program offers for you and your clients. Now, you're going to take into account their best interests and their needs, and you should be compensated for that. So our pricing model takes into account your fees. So we're building this in. So our offers are net of fees. When we make an offer to a client, it's net of fees. Now we're seeking to eliminate any pricing conflicts, as we're not presenting you with a gross offer, and then you take your fee and present a net offer to the client. So we want to remove these conflicts. The purchase price we present is what they walk away with. So how do we work together? Again, thank you for taking the time to listen to us on our webinar here. But I'd say let's have a conversation. We'll do a complimentary review of your client's annuities to see if it qualifies for our program. Again, you can be proactive about it. You can be reactive. What's important is we're discussing the values and seeing if it works. Our agreements, our purchase agreements, are going to seek to protect all parties. We're going to work with the annuity company directly to process the changes that we require. They'll do their review. Again, we're looking to protect all parties. And then in as quick as a few weeks, we can provide your client with the money that they need. My information is here. Again, thank you for taking the time. I know we covered a lot. I encourage you to reach out. My phone number's there, my email's there. I look forward to continuing this dialogue as you learn more about the secondary market for annuities. and the value that stratus funding can bring for you and your client. Have a good day. Take care.